If you have been a buyer looking for a home for the past 6 months, 8 months, from the beginning of the year towards the end of last year, your purchasing power has now just gone up by $100,000. Before I get into it, for those who are new here, first of all, welcome. My name is Clement. I'm a real estate broker here in the Greater Toronto area. If you have been watching a lot of my videos and you've been watching this channel and you want to get in front of me, you want to have a quick discussion with myself just to have a good understanding of where you are with your plans coming into 2025 or coming into the next month or so, the next 9 days, whatever position you're in right now, you could always reach out to me. I have my link in the bio here, or you can just send me a quick text as well. So first of all, there's two major things that are currently happening or have just been announced. And the first one, which we've been talking about from the beginning of the year, are the interest rate drop. Now, so the Bank of Canada just reduced the overnight rate to 4.5%. And what does this mean to you as a homeowner or as a potential buyer coming into the market right now? So this rate drop significantly improves the rate of borrowing from the banks, and in turn, as the consumers were going to really get the effect of this. Typically, when you see a huge change with the interest rate, the real estate market is typically the first one to really get the effect of this before you get into the gas and the grocery stores and in places like this. The real estate market typically within weeks, because the first thing you see, consumers react to this, and I'll show you the numbers behind this as well. And such news creates a lot of activity in the market. And I'll give you an example here. So we do have some properties up in the market. I want to give you two different examples here. So one is a condo downtown Toronto, a 1 bedroom plus den, parking, locker, listed at around $699. And another one is in Brampton, a semi-detached home, freehold, 3 bedroom, 1 bedroom in the basement. And this has been listed for $850. Beforehand, I was not getting that much conversation from potential buyers, from real estate agents. And once this happened, I just started getting calls about this properties, the condo and the semi-detached. So these are two different type of properties in two different cities. One is downtown Toronto, another one is in Brampton. So this is the kind of activity that you'll get to see, and a lot of buyers tend to depend on this interest rate and the purchasing power to really get into the market. And you're going to see what I mean by this purchasing power having gone up. So before I get into my second point here, I think it's very important I show this to you. This is something that I always show to all my clients when I'm sitting down with you for a buyer consultation. I really like to show this graph to my clients. That way you have a good understanding of what you're getting into today and what you could potentially be looking at towards down the line, and you have a good understanding of what happens with the real estate market. So this here is the average price and the Bank of Canada overnight rate change. Now, what is in blue here is the interest rate, and what you see in red is the purchase price. So if you look here, when the interest rates were at 5%, you can see what was going on. It did not change. It went this from a span of from July 23 all the way up until May of 2024. So for the longest time, it stayed there at that 5% rate, and the pricing was still slowly drop. You can see the highest peak here from when it was at 4.5%, or let's take it from where it was exactly 5% interest rate. So at this point, it was really the average price was around 1.2 million there in the Greater Toronto area. And you can see from this point, it started just going down and just fluctuating, never go back up here again, and just slowly going down as it stayed at that 5% rate. Now, when we started seeing the changes coming in from the beginning of the year, so the first interest rate drop, if you remember, was in May of 2024. And you can see once the first interest rate dropped, there was a slight tick to the purchase price. Then again, so this interest rates that were happening to 0.25, they were not making that much of a significant difference, as you can see, because the purchasing price was still going down. This is because at this point, it was still expensive to the average consumer was still paying the same amount for groceries, gas. The prices were still high. So when you're dropping the interest rate by 0.25, it is not making that much of a difference on your mortgage. It's just making, let's say, $100 difference on a monthly point for your mortgage. So this was not making such a huge difference. So the major difference was when it dropped now to 4.25 as of today, which is September 24. And you can see now the price has started going up a little bit. So when you see this graph and it shows you what has been going on, I mean, there's a time here where it was, wow, this is a days that where we obviously wish we could go back to that at 0.25, and this is what happened to the purchasing price. This is in the peak of the market in 2022. So we're not going to be going back to those points. So the reason I like to show this is because you get a good understanding of what the interest rate typically does to the real estate market. Once there's a significant drop, you'll see a purchasing price now start going to go up because there's more activity in the market. As of today, we're sitting in a buyer's market, and how you know you're in a buyer's market, you look at the months of inventory. So I always get this question from my clients or anybody that I mentioned this to: what does 5.13 months of inventory really mean? So to just break it down for you in simplistic form is, so with all the properties that are currently in the market, if nothing else sells or if nothing else comes into the market today, with what we already have, it's going to take us around 5 months to clear out all the properties. That tells you we are in a buyer's market. So to give you a good example, if you look at the peak of the market, which was around February 2022, where the prices were really high, properties were selling really fast, the month of inventory at that point was 0.9 or 0.98, something like this. And what that meant is within a week, homes are selling. So if your homes took more than 2 weeks, more than a month to sell, either you're overpriced or there's something wrong with your home. That's why it's not selling. And that typically would give you a bad stigma. So for you to have a good understanding of this month of inventory as a seller is very important, because that will set the purchasing price that you're going to put on your property that you're thinking of selling coming into the winter market here. Now, the second major thing, or the second major announcement that has gone on, is the Canadian Mortgage Housing Corporation. So the CMHC, the Canadian Mortgage Housing Corporation, announced the increase of high ratio mortgage to 1.5 million from the long-standing 1 million. Let's look at it this way. The current average sale for a property in the Greater Toronto area is 1,120,000 to be exact. If you're increasing this to 1.5 for any first-time home buyer that's coming into the market, now you have room to be able to afford this property. Because another thing, you'll have the opportunity to amortize this to up to 30 years, which reduces your monthly payment. This is for first-time home buyers and for any new build as well. So this is going to be a major change that's going to come into the market. I believe they're thinking of having this implemented as of December this year. Now, obviously, this is going to play a part on the price that you're seeing there today. So whatever price that you're seeing there today, when I'm sitting down with the client for buying consultation, I don't just tell you like, okay, this is the right time to buy. I show you the numbers, I show you these graphs, and you'll be able to see that, okay, if I see something that I'd really like right now, because you have the options, because the amount of inventory that's there, and it is a good home, it's a property that you absolutely like, you probably want to take action on this, because the pricing is naturally going to go up. And you'll see what I mean by this when I start showing the purchasing power that has gone up by 100,000 as well. So obviously this is going to play into the supply and demand aspect of it, because right now there's a lot more supply than demand, because there's less buyers in the market and there's more supply in the market, and the prices have stagnated in that price point that we're in right now. So a lot of buyers that are sitting waiting for something to happen, I will say right now, really make sure you have all your ducks in a row. You've talked to a mortgage broker, you've talked to somebody like myself, created a good real estate action plan that way you can execute as soon as possible. So whether you are in a position, let's say if you're a seller and you're thinking of selling your home and purchasing something, either you want to upsize or you want to smart size into a smaller home, right now is when you want to look into that real estate action plan and see what opportunities are there for you, because you're going to have to give on one side of this, either on the sell side, because on the sell side, again, as I mentioned, you want to make sure you have the right marketing price. You have your property looking good as buyers are walking in, particularly there's going to be first-time home buyers coming into your home. You want them to feel like you're about to purchase a $1 million home. It should feel like it a little bit. So it shouldn't be clouded. So it's just simple things like this that you want to make sure you're good on the sell side as well. So really quick, before I get into the purchasing part, I just wanted to show this to you because this is something that I believe is really good for you to just have a good understanding. Is this graph of the annual inflation rate for Canada, and just to see the journey of where we've come from, for you to have a good understanding of what's happening today and why all these changes we're seeing today of the Bank of Canada reducing the interest rates to what it is, and the amortization time, and also increase of the purchasing price from 1 million to 1.5 million. It's important to have a good understanding of this. So let me just show you this graph here. So when you look at the annual inflation rate in Canada, this graph is showing us from January of 2022. You can see here we started off, this is around 4.8% of inflation rate, and the market was reacting very slow at this time in the winter time. Then you can see what happened here towards the mid of 2022 there. The inflation rate went up to 8%. So this was the peak of the inflation rate, and there was really nothing going on at this time. It was completely dead at this period, and you can see why, because the inflation rate was ridiculously high. Now it started dropping coming into January of 2023. There was a few things that are going on. Then I remember towards mid of 2023, when it dropped significantly, just around that 3%, the market again just shot up. I remember this time, like we were getting worried that we're going to get back to this point of where it was in 2022, where the prices were just ridiculously high. And then again, they increased it to 4%, and then this is what's been going on, because this is the target. The target was to get it down to under 2%, and today we're sitting at 1.6%, and this talks on this being dropped towards the end of the year. I think it's probably going to stay. The next announcement is probably going to just stay as it is. Then coming into 2025, they'll drop it significantly, because we do have elections coming up in November here in the United States, and typically, unfortunately, Canada gets affected a lot by this. So this will play a factor, and we'll see how this is going to happen. I just wanted to show this to you really quick so that you can have a good understanding of it as well. Now, on to what I mentioned at the beginning of the video. The purchasing power have been going up by 100,000. I'm going to break this down in a very simplistic form so you'll have a good understanding of it. So I have this chart here for you, and I have the rate here. This is the mortgage rate at 4%, and when it was at 6%. So the mortgage is 600 and 500. So here you want to equate. So if you have, let's say you're purchasing a property of $800,000 and you're getting a mortgage of 600,000. So that means you've saved up to 200,000 that you're going to add on to this 600,000, and you have a budget of 3,200. Now, if you have a higher budget of, let's say, 5,000, obviously your mortgage is going to be slightly higher than this, and you'll have the ability to have a higher mortgage, and you have the ability to have a higher purchasing power. What I really wanted to show you is the difference of the rate. So you see, when we had the rate at 6% and your budget is the same at 3,200, you're only able to get a mortgage of 500,000. So this is the difference of 100,000, where we are today at 4.25%, and similar budget of 3,200, and you're able to get a mortgage of 600,000. To give you a perfect example here, just last week I had a meeting with one of my clients, a buyer. They're actually a seller. They want to sell and then buy. But when I had this meeting with them, they told me they were searching for a home from the end of last year, and they couldn't find something. And for the budget that they had a budget of around 7,500. And they found a house that they really wanted. So this house will get them into a property of around 2.1 million, but they were not able to qualify for that price range because it's just too much for them. because at that time at 7,500 monthly payment, they were only able to qualify for, I believe they told me, around 1.8 to 1.9 there. And now today they have the ability, with that same budget of 7,500, they have the ability to get up to 2.1 to even 2.2, I believe. It just depends on the kind of property and what we can do with it, if it has a basement that we can rent and all those things. So this is the difference in terms of the purchasing power from when you've been looking at homes from the end of last year to the beginning of this year to today. Your purchasing power as a buyer has gone up significantly. Now, looking at this as a seller, I know some sellers, you might get excited. You might start thinking, hey, let me get an extra price in this. That change still hasn't happened because the price is still stagnant as it is. It just means that the amount of inventory is probably going to go a little bit lower because there's going to be more people coming in. So for the people who have the properties up in the market today, there's a possibility of now you're going to get more activity. You're going to get some offers for a lot of the homes that you have in the market today. Now, one last thing that I'm going to fit, one last graph that I really want to show you as a bonus. This is the population growth. My company, Roller Page Signature, we typically talk about these numbers at the back end and showing us what's going on with the real estate market and what's going to happen, the real estate trends. When I saw this, I figured this is a really good thing for the consumer to really understand, for somebody like yourself who's looking into the market to have a good understanding of this. That's why I wanted to just show it to you guys as well. So this here is the Greater Toronto population versus the Toronto Real Estate Board sales volume. So when we look at this, and this is on a 10-year span. So when you look at this from 2004 to 2024 today, the population in 2004 was 5.1 million people in the Greater Toronto area. And the number of sales that happened in 2004 was 83,501. Now, when we look at this in 2024 today, the population has gone up by 1.26 million, which is 6.43 million people today. And we're projected to have a sale of 70,000 homes sold by the end of this year. So when you look at the difference of this is the difference of 13,501 homes that are required to have sold in today's market. And now when you look at this here, this is some of the things that drives the price up, because the Greater Toronto area, we do need more homes. That's why you're seeing this announcement of big projects that are coming. I'm pretty sure when you drive around, you can't stop seeing a lot of pre-construction homes that are out there. And I know you can't stop seeing a lot of this pre-construction homes that are currently in the market today. But a lot of what's driving this is obviously the inflation, which trickles down to interest rates. The other major thing, which takes a little bit longer to build a home here in Ontario. So all these things play a huge factor as to why we are at a deficit in terms of homes that need to come into the market. So when you are somebody who's looking to get into the real estate market as an investor, as a homeowner, as a seller trying to get into something else, you really want to look at these numbers and let them give you that understanding instead of just waiting and saying, okay, what's going to happen? I'm waiting for the market to drop. I'm waiting for the crash. A lot of these numbers show us that there's an unlikely chance of this happening, because first, there's a lack of homes. Second, because the interest rates have been really high, that's why it has completely stagnated the market. So once this drops, you're going to see a lot of people coming into the market. The population growth just of last year, there's over 1 million people who came into Canada. A majority of them are going to be coming to Ontario because this is where there's a lot of opportunity. They're not going to go to Vancouver. It's really expensive out there. And other cities, Calgary, Saskatchewan, the opportunities are not there as much as they are here. And all these are people who are very well educated, people who can produce into the economy. So there's the things that we really have to look into as somebody who's getting into real estate in this market with this right now in 2025. This is it for this video. Up until next time, see you in the next one. Have a good one.